Welcome back to the Fiat series of the Manifest Your Success podcast. On this show, we take deep dives into what blockchain technology is, how it will revolutionize the world we live in, and the stories of individuals' discovery and journey through the blockchain space.
All right, today we are joined by Will Clemente. Will is a well-known contributor within the Bitcoin community and worked as a Lead Insights Analyst at Blockware for over a year before co-founding Reflexivity Research, a digital asset research firm. He is a frequent guest of the Pomp Podcast and many others. Welcome to the show, Will.
Hey guys, thanks so much for having me on. Really stoked to do this.
Yes, we are stoked too. And actually, this will actually be coming out on the new year. So I figured that'd be just like a good place to start. I know we're recording it still in 2022, but people will be listening to this in 2023. So I'm just curious, like, how do you like look at going into a new year? Like, are you someone that's big on New Year's resolutions, or like, what is your thought process like going through the new year?
Yeah, sure. It's a great question. I think for anyone who's been in the financial space, especially in crypto, is ready for 2022 to be over. That's for sure. I would say, I guess just like personally in terms of like setting goals and things like that. I'm kind of the mindset of like, just like do it instead of like setting a goal of like, hey, I'm going to start doing this next week, or like, hey, I'm going to start doing this on like some arbitrary date, like such as like the beginning of a new year. So I don't know. I don't personally have any like New Year's resolutions, for example, like anything aside from like what I would usually have on like a day-to-day basis of just like finding things to improve and then like just doing them like as they come about, rather than like trying to like set a date in the future and do it, if that makes sense. But yeah, I mean, I guess just like one thing I would say is I'm very excited to turn a new leaf, especially in crypto. It's been an absolute shit show this year. So I feel like with everything that took place, I feel like it can't be any worse, but I've also been saying it can't get any worse for the last 6 months. So it seems like it's been surprising to me, at least, to see how much worse things have been getting. But I feel optimistic for 2023.
Yeah, we were actually just having a conversation about how New Year's resolutions kind of make you like delay starting your goals or like working on what you want to. But I guess diving into crypto specifically, kind of what was the point, or when was it that you first came across Bitcoin, and what was your first like initial impression?
Yeah, sure. So like I initially got into, and this is just important, I guess, for context. I initially got into what I would say like understanding broader financial markets to some degree in late 2019. So I was going to college. I was like dead broke. So I graduated high school a year early. I didn't do anything special to do that. I just took extra online classes. But part of that was I didn't really have any money like saved up for college, because I ended up leaving a year earlier than I thought I would. So I didn't really have any like financial cushion to do all the stuff you want to do in college, which is basically like buy beer. And so I got to the end of the first semester, and the $250 that I had for the semester ran out pretty quick. And I realized I needed to get some type of income over winter break. And so I came back from school and I applied for a couple different jobs. And of course, winter break's only a few weeks long. So like I needed to get something, on the fly. The only place that responded quickly was, of course, like, of course it's not going to be the best job, because they're going to be the ones that like just need bodies. It was Michael's, the arts and crafts store. And it was an overnight stocking job. And I was like, look, man, like I need money for next semester. Like I got to do what I got to do. So I would come into this job at like 1, 2, 3 a.m. And I would come in, we'd unload the truck, and then put boxes out and like stock all the shelves. And there'd be like 3 or 4 people in there. It's dead silent in the middle of the night. And you're like losing your mind. Like you like fall asleep standing up. And I realized, I was like, look, dude, I need to do something that like stimulates my mind, or I'm like literally going to lose it. And so at first I would just listen to music. And, after a few days of listening to music, I'm like, okay, I'm like listening to I listen to like a lot of rap music. But I was like, I'm listening to a lot of the same songs like over and over again about like just like things that are just like not giving me any benefit. Like basically just like, like drugs, sex, and like shooting people, right? And it's like, all right, I'm just like feeding this into my brain for like 6 hours every single night. I was like, there's got to be something I could do that's like a little more productive. And my girlfriend actually suggested to me, she said, well, why don't you listen to a podcast? I was like, okay, I've never listened to a podcast. I've never been like one to read books or whatever. But I was like, okay, if I'm going to listen to a podcast, like what is it going to be on? And like, there's a lot of the like Joe Rogan type stuff where they're just talking about like random things. But I'm someone where like the people just like randomly talking about like a bunch of like nonsensical stuff that like doesn't really like provide any value. Like I just can't really like get engaged in that. And so I was like, okay, like what can I do to get value out of like listening to something? And I was like, well, why not finance, right? Like something like making money sounds cool. Like why not learn about like how to make money or whatever? And so I started listening to a podcast called We Study Billionaires, which is by this guy named Preston Fish. And he basically like at least the early days of his podcast. Now he's like a big Bitcoin guy, but the early days of his podcast was he would basically like break down everything that Warren Buffett's like ever done, said, or touched, and he would break down like all of his mentors' books that he's written, books about Warren Buffett, walking through like all of his like investing principles and all that type of stuff. Which I still think are valuable, although like Warren Buffett and Charlie Munger are very outspoken against Bitcoin. It's all good. You know, I know being 85 tech isn't really your thing, so I'll give them a pass. But yeah, I would listen to those, and I started to get really interested in markets. Didn't have a lot of money to invest at the time, obviously, so I kind of just used it as like a educational like tool basically. And then several months later, after I went back to school, the COVID crash came. So, you know, as many people remember, as coronavirus began to, spread to the U.S., markets began to absolutely freak out. The S&P tanked like 35% or something like that in like 2 weeks. And I didn't, potentially like naively, I just looked at all of these different assets and I said, wow, like everything is just down so much. Like if there's ever going to be a buy opportunity, like it's got to be now. Like everything is just down so quickly, so fast. I mean, I had no idea the amount of liquidity that the Fed was about to like inject into markets, but I just figured like, okay, things are down a lot. Like it can't be a bad time to buy. So I started nibbling on a couple different assets. But then afterwards, of course, the Fed basically announced that they're going to, do whatever. I forget exactly what they said, but basically they said they're going to do whatever it takes to backstop markets, right? And they're just going to come in and just like come out with helicopter money and just absolutely just like ramp up the money printer and shove trillions and trillions of dollars of liquidity into the system until like, it backstops everything, right? And so you had this weird phenomenon, of course, where like the economy was slowing, but like markets were going up. And I remember there was like a good month or two where I was like really baffled by this. I was like, why are markets rising, but like the fundamentals of the economy are going the opposite direction. And with that, I really realized that like markets are all about liquidity more than like actual like economic fundamentals, right? Like the economic fundamentals drive the liquidity, but like at the end of the day, like the amount of money in the system is what drives asset prices, like at least since 2008, because of the kind of moral hazard that the Fed insinuated into the entire system back then. And so with that, I realized, okay, well, like, if everything is just going to go up because they're printing money and like the actual like economic fundamentals of everything going up doesn't matter, what's going to go up the most, right? And so with that, I kind of started looking into different types of assets, and the thing that made the most sense is like, okay, you want to own the thing that's the scarcest, right? Because like if they're increasing the denominator, you want to own the thing with like the smallest numerator, right? And so I realized that was Bitcoin. And so that was kind of my initial like introduction into Bitcoin. It was kind of the whole like Paul Tudor Jones like fastest horse thesis around the monetary debasement that took place at the beginning of 2020. And I really started buying Bitcoin, at least like the initial like sizable position that I took, like relatively sizable for the amount of money I had at the time, was like 5 to 8K. And then I remember, ran up to like 11K, came back down to like 10K in October. And then after that, it just went up only into the end of 2020. And during that time period, I was working at Target. And I was like basically taking all my Target income and like piling it into Bitcoin, like sub 10K, because I was like, things started to run up or whatever because of like the monetary debasement, and also the halving it just took place. And then with that, I started posting my thoughts on Twitter, and I would just, didn't really think anything of it, but I was just like, there's like a bunch of like these like weird Bitcoin obsessed people on Twitter, and like they're kind of like me, like they've found like a big interest in it. And so I was like, look, like I relate to these people. Let me just like start sharing my thoughts with them and like see if, how like receptive they are to it. And like kind of to my surprise, and part of this was like, the market was basically going up only from 10K to 60K through the end of 2020 into early 2021. Everyone was like very well receptive to everything that I was putting out, and that was kind of like how I initially got traction, I would say, on like the Twitter sphere.
Yeah, that's awesome. I can relate so much too. Like when I first got my job, like I literally was just like sitting there and I'm like, what am I doing? I'm literally just sitting here wasting my time. I mean, I'm not wasting my time. Obviously, I'm getting money, but I'm like, okay, really, how can I benefit from just sitting here? And I have like audio inputs, and I did exactly what you did. And I actually stumbled upon We Study Billionaires too. That's just such a great podcast, and Preston's doing so many good things on there. So what kind of like motivated you like to join into like Twitter and like go on that social media space? Was it like you saw just the information there, or like what appealed you so much to hopping on Twitter and just start tweeting things out?
Yeah, it's a great question. I think, there's like, in terms of crypto specifically, there's like a very select few places to go and get information. I think like the two or three are probably like Discord, Reddit, and then in my opinion, what's by far the best is Twitter. A lot of the mainstream, information that you hear about crypto is like a lot of times misleading. And if it isn't misleading, it's almost always delayed in terms of like the information when it comes out on Twitter versus on traditional mainstream media. And so, a combination of that with it was just like that was where the largest base of people that were interested in the stuff were. And then also like people are just much more candid with sharing their opinions, on things like price action, and like just like general like market thoughts and things like that. You'd be surprised with, the amount, like the type of people that you're able to engage with. And like, I know am a bit biased in like the fact that I have like a large platform or whatever. So it's like easier to to get in touch with people like that. I mean, even when I had like a few thousand followers, like in like, like no one who knew who I was at all, like it still wasn't that difficult. Like if you propose like a really good question to someone, under one of their posts, like odds are they'll probably respond. And so I just think Twitter is probably one of the best like informational tools. There's been a lot of issues with Twitter, and I think it's difficult to get the kind of governance structure of Twitter right, as you've seen with like Elon taking it over. But like in general, I think Twitter, at least for crypto specifically, but I think for a lot of other topics, is probably like the best like platform for information out there.
Yeah, I think one of the cool things is that, you said one of the first podcasts you were listening to was We Study Billionaires, and I think you've been on the show now a couple times, so that it's funny how that kind of came full circle. I'm curious, as your Twitter account was kind of growing and you were gaining a large audience, what other opportunities maybe did you kind of see come out of that because you were becoming like a public voice almost of the Bitcoin space?
Sure. Yeah. Great question. I would say first of all that like it definitely grows exponentially and compounds on itself, right? So when you have 1,000 followers, obviously your reach is 1,000 people, but your tweets are really like seen by 5 to 10,000 people through impressions, and like when your followers like a tweet, then their followers see that they like the tweet of yours, and etc. Right? So even though your follower count is like 1K, you might be reaching out to 5 or 10,000 people. As the number of your following grows, that number of people who are actually like seeing your tweet, and it's now cool that they launched views with Twitter because you could actually like see this in numbers. It's orders of magnitude larger the larger your account grows. And with that, yeah, it's just been much easier to like reach out to people, make connections and things like that. And to your point, like, on Twitter, you could just DM someone, right? I mean, a lot of that, at least in crypto, because it's like very much like a grassroots movement or whatever you want to call it. You don't have like Jamie Dimon on Twitter and you can just like DM him, or like Jamie Dimon like shit posting memes. But like in crypto, like all of the top fund managers are all on Twitter. Even now, some of the big guys like Golden Tree, right? Like Golden Tree's head of crypto trading, his name's Avi Feldman, and he's just on Twitter like shit posting all day, like just like posting memes and stuff. And they manage $50 billion. So it's like you don't see anything like that in traditional finance, where people are like just much more like lenient of like joking around, but also sharing information, like both on crypto Twitter and then also like in like Telegram group chats or Discord group chats, things like that. A lot of these, what would be like on a relative basis, like very prominent like hedge fund managers in crypto, they're much more willing to like share alpha and share information. And I think part of that is just because like uh, a lot of the edge in the crypto space just it's so infantile that it hasn't been arbitraged away. Like in traditional finance, like any edge that you have, like whether you're at like Jane Street or like Point 72 or Citadel or wherever, like pick your like quant trading firm, like those guys are under like strict NDAs that they can't talk to any other trading firm and like reveal any of the operational like secrets that they have. In crypto, that's not really the case. Like just because like the market is so inefficient, and so like part of it is like you're like you can shill other people your bags, of course, and like hopes of like getting them to buy your bags, and like that's like the cynical part of it. But also part of it too is just like there, there's so much edge to be had just because of how quote unquote early and nascent the space is, and as a byproduct, like how inefficient the market is. And like I mean, you can see that even on like um, lower time frames, like things like watching crypto reacting to news, for example. Like, you know, whereas traditional finance may react within like a minute or two, a lot of times if they're like, like a CPI print or something, crypto may take like 3 to 5 minutes to react. And so like in that time period, like as a trader, like you can react very quickly and like put a position on or close a position out before the market reacts. So like things like that, like my point in saying that is just like that's like a very micro example of like how inefficient the market is, but like that also applies more broadly to like how the market moves. And I think with the liquidity tide pulling back throughout the year, this really hasn't been the case. Like there haven't been, like crypto hasn't been very narrative driven because just everything has been going down because just the tide has been pulling back in general. But like in a bull market when things are very narrative driven, it's actually like easier than you'd think to just like think about like from first principles, like what are the like narratives that are going to take off in crypto. Like one example being like um in early 2021, just thinking about like who are the basket of market participants that exist right now. And it's like, okay, well, a lot of the people that are punting on crypto right now are retail that are using their stimmy checks, right? And it's like, okay, well, like, what's a retail person going to be doing? Are they going to go in and do like read like the white paper of a protocol and do like sophisticated like modeling out of like a fundamental value of some of these like protocols that are like dishing off revenue, or are they just going to like go punt on Dogecoin? And like the answer is probably the latter, right? So it's like things like that where you can, I feel like at least from like a narrative standpoint, like you can if you do the work to actually like think for yourself in crypto, there's like a lot of edge to be had in like the broad view. But I guess my point in like bringing up the news reactivity thing was just like that even translates and like shows itself even on like the reaction to news and things like that. Sorry, I know I like went completely off like sideways from the question, but yeah.
No, yeah, you're good. I love the way you like articulate like coming to from like articulate how you come to market conclusions and like how they apply to real life situations. It seems like we're gonna get into it at Reflexivity Research. It seems like you found your place there. Before you kind of founded that, you kind of like have done some more like writing and freelance work. So I'm curious, like how did, if at all, did Twitter play an influence on like you writing at like Blockchain Magazine or Blockware, the podcast? Like how did that your Twitter following influence you to get those jobs?
Yeah, great question. Yeah, when I first started like sharing my thoughts with like crypto Twitter or whatever, I had posted an article, I think it was like the end of 2020 or maybe early 2021, like beginning of January 2021, somewhere in there. I posted an article basically talking about like Bitcoin's role in like the macroeconomic landscape, and Preston Fish actually retweeted it, and so that was like huge at the time because I was like a Preston Fish fanboy, and he kind of like put me on and like really helped my like account grow or whatever. And so after that I was like, look, I should just keep putting out these kind of like long form thought pieces. And so I would do that. I created like a medium and I would just like share my ideas about like Bitcoin's role in the financial system or like different like game theory around like Bitcoin adoption or whatever. And then after a while, yeah, Bitcoin Magazine reached out. They're like, we like your stuff, do you want to like come and write for us? And so I spent like a few months there, just like part-time, just like writing like random articles that they wanted me to. And then it wasn't until August of 2021 that after it was the end of summer, and I got reached out by the Blockware Solutions CEO Mason Joppa and a couple other guys. But I really liked the business they were building at the time, and kind of the like freedom that I would have as the role there. And they asked me if I wanted to come on and basically be like their head of research. And so I came on there, and I had already had a newsletter kind of in the months prior to that, but we transferred it over to Blockware. We built that newsletter out to about 70,000 subscribers. When I left 3 months ago, I handed over the keys to them, so now it's their newsletter. But that was kind of my primary role there, was putting out thoughts through the free newsletter that we had at the time, and then also like ran a podcast called the Blockware Intelligence Podcast, where we had a lot of the like more prominent people in crypto on, try to do like a diverse, array of like fundamental Bitcoin people, as well as like hedge fund managers and crypto and things like that, and like give people like a couple different perspectives. Because I just felt like a lot of times, like with like a podcast, they find like a certain credence of being like, I don't know, after a while, like when you hear the fundamental base case for Bitcoin like 10 or 15 times, like, if you've heard Michael Saylor once, like you don't need to listen to him for like 10 hours on like 3 other podcasts, because like basically they say the same thing, like, 10 different ways. So yeah, I thought like it was important to try to give people like a different perspective outside of like solely just being like the fundamental, Bitcoin, pod, and then also like covering some market related things as well. And that was fun. I did that for about a year. But towards the back after that, I kind of really just decided that I wanted to launch my own thing. Not that like I necessarily thought there was something wrong with the role that I had at the time, and like I did enjoy it, but I thought just kind of like the next step for me, and kind of where we were in the market as well, it was a good time to kind of take that step to try to do something on my own.
Yeah, that's awesome. Before we get into like your own enterprise, I kind of want to double click on like how much you've like kind of how writing and like podcasting kind of helped you like gain different perspectives. So like how has like you actually practicing the writing and like articulating your ideas out to the public, how has that practice kind of influenced how knowledgeable you've become on this space?
Sure. Yeah, I think that's a fantastic question. I would just say, like, first of all, like, there's a ton of different like Substacks, and these aren't like company Substacks. These are like individual people, like oftentimes like anonymous, people in crypto with like anime cartoon pictures as like their profile pictures. But you read their blogs and they have like brilliant stuff to say. There's like a lot of hidden gems of people that are doing this. They have Substacks or whatever other like newsletter medium that they're using. I think, to answer your question specifically, I think writing is like an incredible tool that I've been able to utilize over the last 2 years. Like I never really wrote much, but having like a weekly newsletter, I forced myself every single week, and in between writing each one between the weeks, you're still like writing stuff throughout every day, like putting down thoughts that you want to touch on at the end of the week, and it really makes you like I guess like self-reflect and like be analytical of yourself and like your own thought process, and like make you question like, why do I have this opinion, right? Like let's say like you have a thesis in the market, right, that like Bitcoin's going to go up next week to X price, or like this random coin is going to go up in whatever time frame, and like you start to write out your thesis for that, and you really have to like you really have to like question yourself and like criticize your own thinking through that process. And like a lot of times you'll find like holes in your thinking where you're like, okay, this is something that like I haven't considered yet. I don't have the answer for. I should probably have the answer for that, right? And so like there's been times before where like, at least personally, I've been writing, and it's been about like a certain topic or something, and I've just like scrapped the whole article or piece, because I've gotten like halfway through it, and then I realized like, wow, like I didn't even think about this certain point or whatever, and then it like throws away the whole thesis. So I think that's one like big benefit of it. And then also like from a like solely like market standpoint, because part of it is like I'm a long-term investor in Bitcoin, of course, and like I have a core position that like I'll never touch, that's like in cold storage, like like that will never get touched. But I also do a lot of like active trading personally, a bit less, like in these market conditions, but in generally, like I do a lot of active trading specifically like with altcoins. Um, and from like a market standpoint, it's really helpful to write about like what your thoughts are on the market at the time, like how you're feeling and things like that, because you can go back and see how you're feeling, right? Like, let's say, I go back to, I don't know, some time period where like the market was going up only, which feels like a long time ago. And I'm writing in that piece, oh, on my notes for the day, oh, it feels like the market's never going to stop going up. Everything's awesome. Every coin's going up only. I feel like everything's about a 5x in the next week. And then, I start to feel that way. And then I go back and look at my notes and I'm like, damn, dude, I wrote that at like the Pico Schmico top before everything went down only. So it's like you can kind of like go back and like look at your thoughts and like kind of check your emotional bias. And so I think that's been really helpful for not only like going back and looking at it, but like also like being conscious of it too. Like, because a lot of times like your like your feelings and like your emotions around the market are like very subconscious. And so like when you force yourself to write it out, you kind of like pull it into your like forward thinking, and it's very much like in front of you, and you have to kind of like face the way that you're feeling because you have to articulate it. So yeah, I think like writing for anyone like in markets, it's super beneficial both for like writing out long-term thesis as well as like trading. I think like it's very beneficial in several ways.
Yeah, I love that breakdown. I feel like a lot of people think that you have to write for like other people, and like just because you have to write to post something online, but like majority of the time when you actually do write, it's going to be benefit yourself a lot more than it is your audience.
Yeah, I think you have a cool little path, which I think is a result of crypto being a grassroots thing, like you said, where you didn't major in like Bitcoin studies, or you didn't like work at Coinbase prior to Blockware. You built a portfolio through Twitter and through the newsletter, and that kind of led you to Blockware and ultimately led you to starting Reflexivity Research. So I'm curious, you've kind of through the research you do, you've kind of been an advocate of like on-chain metrics and on-chain analytics. Could you maybe touch on like what those are and maybe why they're important in looking at things like Bitcoin?
Yeah, of course. I just wanted to touch on before I forget something that you said. I very much agree with basically the way that you described it is like using Twitter or something as like a portfolio for yourself, right? With our team is still very small at Reflexivity. We're about 6 people in total, but 3 of the analysts that we've hired have all been anonymous. And when I hired them, like I didn't even know like their prior work experience. I knew like one thing that they had each done in the past. Like 2 of the guys I knew like interned at a hedge fund in crypto. But like it really didn't matter, right? Like it didn't really matter to me like how old they were. They could be like 75. I mean, or they could be 12. Like it didn't really matter. What mattered was like I knew the work that they had put out into like the ether, right? Through Substack or Twitter or whatever it may be. And so I think like this is like very much a crypto thing specifically, but like also I think it's starting to like get traction in like broader tech and just in general, like in business, is that like, you just put out your thoughts, right? Like what's stopping you? Like sure, you don't have experience or like a resume from like Ivy League school, but like if you put out like an absolute bomb ass thesis on like whatever it is, and it's like on par with something that someone from an Ivy League school would write, like the person that's looking at that piece to potentially hire you, like they're not going to care like what school you went to, because like you sent them like you have like the proof of work, right? Like Bitcoin's like proof of work, right? Like that's embedded into the protocol itself, right? And like to tie it into like the like ethos around like how people operate in the space too. It's very much like, okay, well, like show me what you've done, like show me the proof of work. And so yeah, but to get to your question, sorry, on-chain analytics. Yeah, on-chain analytics are something that's like very unique to crypto. It's actually only possible in crypto because of basically the way that the technology works. And blockchain technology, for anyone who doesn't know, there's a history through something called a ledger of transactions, which basically means that like every single block of transactions is attached to the chain of prior transactions, right? So the block that comes out in 4 minutes at 12:40 will get attached on to the other millions of blocks that have been created before it. And so, anyone who has a node can go in and look at and pull the entire blockchain. And this is one of the beautiful things about Bitcoin. Anyone in the entire world can permissionlessly download the entire ledger and look at every single transaction that's ever taken place. The receivers and senders on each side of any single transaction. And so on-chain analytics basically utilizes that and the fact of how transparent that Bitcoin is and other digital assets. We can go in and look at data and like a granularity of unlike anything else in traditional finance. One example of this, which I always like to give, is like if you think about in like traditional technical analysis, which a lot of people like to use for stocks. You have moving averages, which are a very common tool that people use. People look at 20-day, 50-day, 200-day moving averages. People also look at some weeklies, like 50-week, 200-week, or whatever. But what you're essentially trying to do is you're trying to gauge like what's the cost basis of the market, right? And so like the further that you go out, so if you're looking at like a 200-week moving average versus a 200-day moving average, or a 200-week instead of a 50-day, the further you zoom out, like the broader the scope of the moving average, the broader the cost basis you're getting of like a longer time period, essentially. And so the idea is like from like a psychological standpoint, whenever the market either comes, from the underside and like retests it from the underside once below, or if it's above and comes back and retests it from above, there should be some type of like behavioral reaction to that. Not just because like it's a magic line that like everyone's looking at on a chart. Like obviously like there is some of that because like everyone decides that like this like line on the chart matters, right? So like people react to it, but also like from like a pure behavioral standpoint, and like I very much do believe this because like this even works for things like NFTs, where like no one does TA on NFTs, but like I have a couple friends who have like data providers that they're able to like basically create like chart out NFTs. And it's funny that like the same like behavioral principles that apply to assets that of course like everyone is looking at, these like price levels or whatever, like it still applies, like traditional like support and resistance still applies to something like NFTs, which doesn't really have like the same like broad view of all of the pricing mechanism that I'm talking about. So like my point in saying that is it's very tied into the actual behavior of how people react, right? Like if I buy something at $100 and the price goes below $100, I'm underwater, right? I'm sweating. I'm like, oh shit, like, should I sell? Like, I'm underwater. What if it goes to 95? Then it would be down $5. And so, you start to get that kind of panic built up into the market. And the further you go away from that, the more enticed those people, if they're not convicted in the asset, or if it's just a short-term trade, probably are going to be to sell. And same to the other way, right? If you're short and the market starts going above where you got short at, it's the same dynamic, but the inverse of that. And my point in all this is that in on-chain analytics, we can gauge the cost basis in much more granularity than what you can do in like a traditional moving average. So we can actually look at the entire blockchain and say, what's the cost basis of every single transaction that's ever taken place? And then you can also apply like time aspects to it. So like, what's the cost basis of every market participant that's been in the market for less than 5 months? Or what's the cost basis of every market participant that's been in the market for longer than 5 years? And that's something called realized price. It was created in 2018. But that's just an example of we can get a lot of insight into the same behavioral dynamics that a lot of people try to ballpark through traditional technical analysis, but we have actual like statistically proven like data backing the exact like number of whatever that like behavioral trend that you're trying to identify is.
Yeah, that's phenomenal. I think
I know that was like a full mouthful, but
no, yeah, dude, that's awesome. You're so knowledgeable, and it's awesome that you can really speak for that long. I'm really impressed at all your knowledge at this age, really. For someone we're both in college here. I'm curious. So like, well, let me touch on something you said. I think like a lot of people like listen to this, maybe more towards our audience, aren't as super knowledgeable as from what you're talking about, like on chain. But I think it's super important that like every level that like the deeper you get into Bitcoin and the deeper you get into this blockchain technology, just the more it makes sense for society. And I think that's really a really like important thing that we should look at when we're looking at the space and the future of its space, because the more you dig into this, the better it gets. And usually when you're picking apart something that's flawed and you dig deeper into it, you're going to find a flaw. But in this case, it's the complete opposite, which I think is super important for the space.
Yeah, I think that's well said. And I would also say, like, just to like wrap up on-chain stuff, is like I just basically described like a bunch of like market related like trading type like reasons why on-chain is good. You can also look at like very fundamental, like, if you're like just someone who's like looking to just like buy and hold Bitcoin for like 5 or 10 years, you can look at things like issuance, right? And like just see that every 4 years, the amount of Bitcoin that are, coming out into circulation are getting cut in half. You can look at, the number of active addresses on chain, which basically is representing how many users there are. And you can see, well, okay, over the last 12 years, that value has made a higher low every single bear market. So like, yeah, there's new people that, what does that actually mean? It's like, okay, there's new people that come into the space in a bull market, but like every bear market, the amount of people that stick around is higher than the last one. And that's what really matters, right? So, you can even look at like the fact that you can look at block height, like something as basic as block height, which is just like the number of blocks that are on the chain. You can say, look, like block height's increasing, so blocks are coming out every 10 minutes. Like Bitcoin is working. Like, yeah, it's down 80%, but like the protocol is working. You can look at hash rate and see, okay, there's near an all-time high in terms of the amount of like energy that's being used to mine Bitcoin. Like there's an incredibly large demand from people to mine Bitcoin. So, obviously that's not going away, and that also ties like an underlying electrical value into the pricing of Bitcoin. So like, not only can you, I would say, like look at on-chain for like market trading related stuff, because like I'm sure like a lot of people that are listening to this probably don't care, but like the people that are like maybe considering like just buying BTC for like 5, 10+ years, like there's a lot of things in on-chain that you can look at. Like if you are like losing conviction in Bitcoin or whatever because it's down for the year, you can look at these things and just get assurance that like, yes, like the underlying quote unquote fundamentals of Bitcoin are increasing over time.
Yeah, I think that's a great point, and I think that's kind of what you illustrate through your research, right? People can go to something like Dune or a tool like that, and they can see certain dashboards of on-chain metrics, but being able to structure research where you're showing, hey, this is what's happening with minor-ish or like miners or something like that, and then you provide the research, say, hey, this is why it's important, this is what this means. Like that's valuable research in it of itself. And so maybe I'm curious, which it kind of seems like that's what you're doing over at Reflexivity. Maybe what was the problem you were trying to solve, or like what's your goal with Reflexivity Research?
Yeah, it's a good question. Sorry, I know I've done this a few times, but I just wanted to hit on something that you said there. You talked about like Dune Analytics, right? And like that's more like Ethereum, like smart contract based stuff. Like what's also interesting, I would say, about on-chain from like applying it to like smart contract protocols is that you can see things like, let's say someone's like taking a loan out on something like Aave, which is like a borrowing lending protocol. So it's like automated borrowing and lending, which, by the way, despite all the CeFi blowups, all the DeFi protocols are just fine. Sure, their volumes are down, but they're smart contracts, so no one gets any special, treatment. Like all these crazy things that were going on these centralized platforms. These are smart contracts that are going to treat any lender differently, no matter like what their reputation is or whatever, and so therefore they've been just fine. But you can see, okay, for example, Celsius, when Celsius was blowing up. I don't know if you guys remember when Celsius blew up back in June. They were like one of the big like retail facing borrowing lending platforms, and you could see that they had a loan out. I think it was on Aave, and you could see that we were like within a couple $1,000s of their liquidation price. And so like if price hit this certain level, I think it was like 17K at the time or something like that. You could see that like $300 million of wrapped Bitcoin on ETH was going to get liquidated. And so all of a sudden, like, well, what does the market do when it knows that there's a certain, price value that can get hunted? It starts gunning for it, right? And so you started to see that the market just sold off aggressively further towards that liquidation price. And then you could see on chain that they were adding more collateral, trying to get the liquidation price lower and lower so that the sharks that were trying to hunt them couldn't liquidate them. And it was like really incredible to see. These are things that take place in traditional finance, but like the amount of transparency that like you can see in real time for someone who's like a like market geek, like that's just like the coolest thing ever. Okay, so to answer your question, why we launched Reflexivity, I mean, look, I think that there's a couple data providers out there. A lot of them do a good job. I don't want to name names, but there's been some issues with a couple of the data providers that exist. I don't think it's a full reflection of all the teams on that were part of some of the names tied in with some of these issues. But I think in general, there's a lot of space to become a trusted, independent voice in kind of the crypto information space. And I think it's going to be a space where there's like multiple winners. I don't think there will be one research firm that prevails. I just think naturally, part of like the crypto ethos is like, decentralization and like, not just trusting information from one source. And so I think part of that will be there'll probably be like a big 4 or 5, research firms that like emerge in the next like 5 or 10 years. And so, I think kind of where we are in the market, it's opened up a really good opportunity to kind of build out a brand and a reputation of being exactly that. And I think we have like a really smart team to do so. And I would say the last reason was I thought we also had a competitive advantage in terms of distribution between my like Twitter platform or whatever you want to call it, and our co-founder Anthony Pompliano, who's got 1.6 million followers and a massive YouTube audience. So kind of being able to tap into those distribution channels, which usually you'd have to pay tens or if not hundreds of thousands of dollars for to tap into some of those like marketing channels. I think is somewhat of a competitive advantage for us. But yeah, I think like what's the mission statement itself is really just bridging traditional finance entities into the crypto space. I think we try to be kind of the bridge between traditional finance and crypto. There's a lot of great content out there, but sometimes it gets a bit too deep in the weeds, I would say. So while we do offer some of that, and we'll do things like protocol deep dives and get very technical in terms of like how the protocol operates or whatever. We also do a lot of just like very surface level, I guess you could say, like pieces without any jargon, which I think is like the important thing to say to like help have traditional finance like understand what's going on in this very like nascent space where there's like a lot of word salad and like a lot of like confusion around like what am I even supposed to be like looking at, like where do I even start here. Like anyone who's got into crypto probably realizes like it's just so overwhelming because there's like tens of thousands of coins and you don't even know like how to even think about what's a scam and what's not. And that's why like there's been so many grifters and like scammers in the space and so many people that look at Sam Bankman-Fried, for example, right? A lot of those type of people have been able to emerge over the last 10 years in crypto just because it is so new. And I mean, that's not a crypto native thing. That also happened with the internet, right? Like if you go back to the late 90s, early 2000s, plenty of grifters back in the internet tech bubble. But as people understand that, it would just be, I'd say like there's going to be a high correlation over time with like education and like the decline in grifting in the crypto space.
Yeah. I think it's awesome what you mentioned about the creator economy and how it really is just growing now. I think it is giving a lot of power like back to the people, which is kind of this whole idea of blockchain and its mission behind it. I love everything that you and Pomp and your whole team is doing at Reflexivity Research. I think it's awesome, and I wish you guys the best. But it's kind of a bittersweet feeling here that we're running out of time, and we have a bunch of content that we could probably talk about for hours. But so just like for a handoff to our audience, before we kind of close out, we'll have one more question after this. But like, do you have any like really even just in general, it doesn't have to be blockchain specific, just like life books that you read or podcast episodes that you think just were really influential on you as a person and your growth?
Yeah, no, I think that's a fantastic question. It's something I've never been asked before. I really like the book Think and Grow Rich. I think that's a book that really kind of helps you like hone in on your psyche. And like one big takeaway from that book, I think is just like a lot of people, let me think of how to word this. Like basically like you decide who you want to be. Like, let's say for example, you want to be like a famous boxer or whatever, or you want to be like a big MMA person. Like instead of like taking the steps and like being in the mindset of like, I'm a protege, like boxer, like I'm like, very like low level, like you decide in your mind, like, no, like I'm a pro boxer, and like you like basically like trick your mind into thinking like, okay, I am this person that I want to be. And like you can do through that, like through meditating, and then also like drilling it into like your subconscious mind. And then like you decide who you are, and then like you just act accordingly. So it's like I know it sounds really simple, but like you obviously, like the hard part is like actually doing it. But like you say like, okay, I'm going to be an MMA fighter. Like I'm going to be, I'm going to be a track star, or whatever it may be. And, like you wake up in the morning, you're like, okay, like what am I going to do? Like I'm a professional athlete. What do I do? I'm probably just going to like eat some really good food, and I'm probably going to go work out like all day, right? And like do all these like really like sophisticated workouts that are like specialized for certain muscles that you need for whatever sport that you want to like excel in. And yeah, like, and then like if you want to be like a big hedge fund manager, like what's a hedge fund manager going to do when they wake up? Well, they're going to wake up, they're going to like check market information that matters. They're going to, probably listen to a podcast or two from like people that are like worth listening to. And then they're probably going to like check out a couple like reliable, like, resources for research that they have or whatever. And they're probably just going to be absorbing that information like 24/7. So I would say like it's very simplistic, and obviously like much easier said than done. But like that was like the biggest takeaway I would say from that book, is like basically like you tricking your mind into like believing whoever you want to be, like deciding that you are that person, and then just like acting accordingly until it comes into fruition.
Yeah, 100%. I definitely agree with that there. And for each of our podcasts, we kind of leave our guests with one final question, and so that is, what is one goal you have? And it can be a career goal, personal goal, and what steps are you taking to achieve that goal?
That's a great question. I would say for like I'll do like one corny one, and then like one like selfish one. The corny one would be like bringing Bitcoin into the masses and like helping people understand Bitcoin. Like I do think that's important. But of course sounds like super like corny and like cliche. And I think I'm taking steps to do that through like, like publishing my thoughts on Twitter or whatever, and like telling people not to, lose conviction. Not saying that I'm advocating for people to like bag hold their net worth down from the all-time high in Bitcoin, but just like, to stay invested with like a reasonable size of amount that like they're not scared to lose, and, remember like, what kind of the asset stands for over time and things like that. On like a selfish standpoint, I would say like what I kind of want to do in life, and like not to take this away from like the whole like effective altruism thing, because like by no means am I an effective altruist. Like I'm not gonna like LARP and say that like every dollar I make I want to give away, because like I do like to treat myself. But like I would say I would like to like accumulate like a large sum of wealth throughout my life, and then like distribute it in like the back half of that. Like if I was gonna think of my life, I think of it in kind of like 3/3, or like three different parts. It'd be like the first part is like accumulating wealth, the second would be distributing it, and then the third is just like going to chill somewhere on like an island. So like I'm still in part one, and then I would say like part two would be distributing it to whatever like cause that I find interesting. I don't think I've found like what that would be, like how I could make a good impact on the world, but like I think that would bring a lot of fulfillment to me. So yeah, that'd be my answer. And then how am I doing that? Holding Bitcoin for the next 15 years is part of that. And then, starting a business, and, seeing where this goes. And if this doesn't work, starting another business. But for now, this is what I'm fully focused on. So.
Awesome. Well, definitely some respectable goals, and I hope you get close to achieving those. I know you're on Twitter, W Clemente I think. Is there anything else you want to leave with the audience where they can find you or what you're working on?
No, man. Yeah, that's where you can find me on Twitter. Our website's reflexivityresearch.com. No, I mean, I really enjoyed the conversation. You guys asked really good questions. I've been on a lot of like these, like mainstream podcasts or whatever in crypto, and like probably been on like every, top 5 or 10 crypto podcasts. And you guys have definitely asked, definitely like top 2 or 3 of like best questions that like I've ever been asked.
Well, thank you, man. Thank you, man. We're honored to have you here, and hopefully, if you don't come back on the podcast, we'd hopefully meet you in a conference, maybe in Denver somewhere.
Yeah, man, that would be great. Yeah, happy to come on, whatever, once a month or every other month or something like that. Really enjoyed the conversation, and yeah, are you talking about ETH Denver?
Yeah. We're looking at it ourselves.
Yeah. I might go. Yeah, I might go too. So maybe I'll see you guys there.
Okay, awesome, man. We appreciate your time.
Sweet. Thanks so much, guys.